Hello and welcome to the Daily Market Commentary for the 22nd of January 2020. Tuesday was dominated by the market's reaction to the first US case of the Chinese coronavirus. Wednesday will see markets shrug off the previous day's negativity, with equity markets in Asia rallying across the board. The Hang Seng led the gains with a rally of just over 1.25%. FX would also see a reversal, with dollar yen rallying back up to 110.10. And sterling will continue to rally, reaching a high of 131.52, with traders less convinced of a rate cut in the UK next week. Aussie would briefly break support at 68.40 on the back of a weaker Westpac consumer sentiment survey, dropping down as low as 68.25. But the overall change in risk sentiment saw a squeeze back to 68.56 during European trade. The DAX briefly touched a new intraday record, but backed off as European markets remained wary of the coronavirus spread. So the US session saw Wall Street open at new historical highs, but for the Dow Jones, that would be short-lived. The opening 100-point gain was largely erased as Boeing stock took yet another tumble. However, the S&P and Nasdaq remained in positive territory, at least into the European close. Euro-dollar would try and move lower, but ran into solid bids again at 110.70. And dollar yen would once again fail above 110. More talk of the potential spreading of the Chinese coronavirus and the word pandemic appearing in several news reports certainly didn't help sentiment. Gold continued to consolidate between 1550 and 1560, but the real mover and shake on the day would be the Canadian dollar. While the Bank of Canada didn't cut rates in their monetary policy statement, the statement itself was particularly dovish. This saw dollar CAD very quickly jump from 130.45 to a high of 131.52. This seemed to be enough to drag Aussie and Kiwi a bit lower, but not enough to make new lows on the day. And as the US day progressed, action was extremely limited for FX as equities dribbled lower. At the close, the Dow Jones was down by just 9 points, although the S&P and Nasdaq did close fractionally higher. Sterling and CAD aside, the major FX pairs ended little changed from Tuesday. If you weren't a CAD trader, this was not the most exciting of days. Moving on, just to take a look at a technical picture. I guess given CAD was the big mover on the day, it would be rude not to look at a dollar CAD chart. I have up an hourly chart here. As I did highlight recently, dollar CAD had been stuck in a 150-point range really since the beginning of the year, between 130.105 and a low down towards 129, 129.50. Well, today it broke, and it broke with authority as we screamed through the 131.05 level, on the way to a high of 131.52. Given the ferocity of the move, you would imagine there would now be some good buying interest back to what is now going to be support at 131.05. And as you can see here, we have some, the next band of resistance to the top side would come in somewhere between 131.80 and 131.85. Often when you get these very, very sharp moves caused by a piece of data or a central bank statement, and you get a real gap through specific levels, you do have traders playing catch up, waiting for a dip in this case to try and get themselves long dollar CAD on the back of the dovish statement. So keep a lookout at that for the next few sessions. And with that, I wish you all a good day, and speak to you tomorrow. Cheers.